Welcome back to Boni's Life, the channel where we decode the crypto markets with intelligence, precision, and just the right amount of wit to keep you engaged, whether you're a complete beginner or a seasoned trading veteran. I'm your host, Boni, and today we're diving deep into what could be one of the most pivotal 24-hour periods in crypto trading this year. We're sitting at a fascinating crossroads in the crypto markets. Bitcoin is consolidating around $118,000. The Federal Reserve is about to announce their rate decision in just hours, and we have a trade tariff deadline looming that could shake global markets. But here's the thing, and this is where it gets intellectually stimulating. The convergence of these events is creating some of the most compelling trading opportunities we've seen in months. Today, we're going to dissect exactly what happened in the past 24 hours, analyze the technical patterns that are screaming for attention, and most importantly, I'm going to give you specific trading strategies and technical triggers for the next 24 hours. We'll hear from legendary traders, regulatory officials, and institutional giants who are literally reshaping how crypto trades in real time. Let's start with the facts, because in this business, facts are your foundation and everything else is just noise. Over the past 24 hours, we've witnessed what I call a controlled consolidation in the crypto markets, and the data tells a fascinating story. Bitcoin is trading at $117,906, down a modest 0.42%. Now, before you think that's boring, let me explain why this seemingly small movement is actually incredibly significant. We've been range-bound between $116,000 and $120,000 for over 2 weeks now, and this isn't random price action. It's institutional accumulation disguised as retail boredom. Ethereum is showing more pronounced weakness at $3,760, down 1.62%. But here's where it gets interesting. The selling pressure is concentrated in specific time frames that correlate directly with traditional market hours. This suggests institutional rebalancing rather than panic selling, which is actually bullish for our 24-hour outlook. The altcoin space is where we're seeing the real drama. Meme coins are getting absolutely hammered. Bonk down 12.55%, Dog Wi-Fi down 7.52%, and Fatcoin down 8.25%. But here's the intellectual twist that most traders are missing. This isn't random altcoin weakness. This is smart money rotating out of speculative assets ahead of the Fed decision, creating opportunities for those who understand the pattern. The total crypto market cap sits at $3.74 trillion, down just 0.24% from last week. That's remarkable stability considering the macro uncertainty we're facing. This tells me that the institutional bid is strong, and any significant dip from here is likely to be bought aggressively. Now, let's talk about the elephant in the room. The Federal Reserve decision happening today at 2 p.m. Eastern. The consensus expects rates to remain unchanged at 4.25% to 4.50%. But here's what the market is really pricing in, and this is where your edge comes from understanding the nuances. The CME Fed futures are pricing in a 73% probability of a rate cut in September. That's up from 65% just a week ago. What's driving this shift? It's not just economic data, it is political pressure. We have two Fed governors, Christopher Waller and Michelle Bowman, who are potential no votes on keeping rates unchanged. If they dissent, it would be the first time multiple governors have dissented since 1993. So Christopher Waller said just 2 weeks ago, and I quote, With inflation near target and the upside risks to inflation limited, we should not wait until the labor market deteriorates before we cut the policy rate. This isn't just Fed speak, this is a direct challenge to the current policy stance. But the Fed decision is just one piece of the puzzle. We have the August 1st trade tariff deadline, creating additional volatility. President Trump has threatened tariffs ranging from 15% to 50% on multiple countries, including Brazil at 50%, India at 26%, and Canada at 35%. The market is treating this as a binary event. Either we get deals or we get trade war escalation. Layer on top of that the economic data tsunami we're facing, GDP estimates today, PCE data Thursday, and non-farm payrolls Friday. Each of these has the potential to shift Fed expectations and create the volatility we need for profitable trading. Here's where it gets really interesting from a crypto-specific perspective. Yesterday, the SEC approved in-kind creations and redemptions for crypto ETPs. SEC Chairman Paul Atkins said, "It's a new day at the SEC, and a key priority of my chairmanship is developing a fit-for-purpose regulatory framework for crypto asset markets." This isn't just regulatory news. This is a fundamental shift in how institutional money can flow into crypto. In-kind redemptions reduce costs and increase efficiency, making crypto ETFs more attractive to large institutions. The timing just before the Fed decision is not coincidental. Now let's get into the technical analysis, because this is where the rubber meets the road for our 24-hour trading strategy. Bitcoin's chart is telling us a story, and if you know how to read it, it's practically shouting the next move. We're looking at a textbook bullish pennant formation. For those new to technical analysis, a pennant is a continuation pattern that typically resolves in the direction of the prior trend. Bitcoin's prior trend, decidedly bullish, with a move from $49,000 to $123,000 over the past year. The pennant is formed by two converging trend lines, resistance around $120,000 and support around $116,000. We're currently sitting right in the middle at $118,000, which is actually the optimal position for a breakout. The volume profile shows accumulation at these levels, not distribution. The RSI is at 58, which is above neutral but not overbought. This gives us room for upward movement without hitting resistance from momentum indicators. However, the MACD showed a bearish crossover last week, which is creating some short-term headwinds. Here's the key insight. The MACD bearish crossover is happening at a much higher level than previous cycles, suggesting this is a consolidation within an uptrend rather than a trend reversal. This is classic institutional accumulation behavior. Ethereum's technical picture is even more compelling. We're holding above the critical 3,730 daily support level, and the RSI at 75 suggests we're in overbought territory, but with strong momentum. The recent break above $3,730 was accompanied by significant volume, indicating institutional participation. The key levels for Ethereum are crystal clear. Support at $3,730 and $3,500, resistance at $4,000. A break above $4,000 targets $4,200 quickly, while a break below $3,730 could see a test of $3,500. XRP is showing a different pattern entirely. After breaking below $3.40, we found support at the 61.8% Fibonacci retracement level at $2.99. This is a critical level. Hold above $2.99 and we could see a recovery to $3.40. Break below and $2.72 becomes the target. The volume analysis across all major cryptocurrencies shows something fascinating. Selling volume is decreasing while buying volume on dips is increasing. This is classic accumulation behavior and suggests that any significant weakness will be short-lived. Now, let's hear from the experts who are actually moving these markets. I've gathered insights from legendary traders, regulatory officials, and institutional giants, and their perspectives are going to shape our trading strategy for the next 24 hours. Let's start with Peter Brandt, the 79-year-old legendary trader who's been calling crypto tops and bottoms with remarkable accuracy. Brandt recently told Cointelegraph something that every trader needs to hear. Anyone that looks at the charts and tries to tell you where anything is going is actually just kind of fooling themselves. But here's the nuance that most people miss. Brandt isn't saying technical analysis is useless. He's saying that precise price predictions are impossible, but asymmetric risk-reward setups are identifiable. As he puts it, give me a point where I can risk $1 and possibly make $4, then I don't care whether I'm only right half the time or not. Michael Saylor, MicroStrategy's chairman and one of Bitcoin's most vocal institutional advocates, recently updated his long-term Bitcoin target to $21 million by 2046. That's a 175-fold increase from current levels. While that might sound outrageous, Saylor's track record of institutional Bitcoin adoption gives his prediction significant weight. More importantly for our 24-hour strategy, Saylor's recent comments suggest that institutional demand remains robust despite short-term volatility. He has been consistent in his message that Bitcoin volatility is a feature, not a bug, for long-term institutional holders. From the regulatory side, SEC Chairman Paul Atkins' recent statement is a game changer. His comment that today's approvals continue to build a rational regulatory framework for crypto, leading to a deeper and more dynamic market, signals a fundamental shift in regulatory approach. Jamie Selway, director of the Division of Trading and Markets, added, in-kind creation and redemption provide flexibility and cost savings to ETP issuers, authorized participants, and investors, resulting in a more efficient market. This isn't just regulatory speak. This is the infrastructure being built for massive institutional adoption. Speaking of institutional adoption, BlackRock's IBIT ETF now holds $86 billion in assets and recently acquired 1,230 Bitcoin in a single day, worth $147.4 million. This isn't speculation. This is institutional infrastructure being built in real time. Cathie Wood's ARK Invest has been making strategic moves, selling block interest shares while doubling down on Ethereum-focused Bitmain immersion technologies. This suggests institutional rotation within crypto rather than exit from the space. Even traditional finance is getting bullish. JP Morgan doubled their Robinhood target price to $30 based on crypto and tokenization potential, while Citi analysts predict Bitcoin could reach $200,000 in 2025. These aren't crypto-native analysts. These are traditional Wall Street firms updating their models for crypto reality. All right, now for what you've all been waiting for, specific trading strategies and technical triggers for the next 24 hours. I'm going to give you 3 distinct setups based on different risk tolerances and market scenarios. Strategy number 1, Bitcoin breakout play. This is for traders comfortable with moderate risk and looking for 3 to 5% gains over 24 hours. We're watching for a break above $120,000 with volume. Here are your specific triggers. Entry, $120,100. Confirmed break above resistance. Stop loss $117,500 below pennant support. Target 1, $122,000, previous resistance level. Target 2, $123,218, all-time high retest. Risk-reward ratio 1 to 2.5. The catalyst for this move would be dovish Fed commentary or positive tariff news. Watch for the 2:30 p.m. Powell press conference for verbal cues about September rate cuts. Strategy number 2, Ethereum momentum continuation. This setup targets Ethereum's relative strength and institutional ETF flows. We're looking for a break above $3,800 to target the psychological $4,000 level. Entry $3,805, break above recent resistance. Stop loss $3,720, below daily support. Target 1, $3,900, measured move. Target 2, $4,000, psychological resistance. Risk-reward ratio 1 to 3. The key catalyst here is continued ETF inflows and any mention of Ethereum in Fed discussions about digital assets. Strategy number 3, altcoin oversold bounce. This is a higher risk, higher reward play targeting the oversold meme coin sector. We're specifically watching Solana as a proxy for altcoin sentiment. Entry $175, bounce from support. Stop loss $170 or below key support. Target 1, $182, 20-day moving average. Target $290, previous support turn resistance. Risk-reward ratio 1 to 4. This play requires Bitcoin to hold above $117,000 and any positive news flow to trigger risk-on sentiment. Risk management rules for all strategies. 1. Never risk more than 2% of your portfolio on any single trade. 2. Use trailing stops once you're 50% to your first target. 3. Take partial profits at target 1, 50% of position. 4. Let the remainder run to target 2 with trailing stops. Key timing and catalysts for next 24 hours. 2 p.m. ET, Fed rate decision. 2:30 p.m. Eastern Time Powell press conference. 8:30 a.m. ET, Thursday, GDP data. Asian market open, 6 p.m. ET, watch for overnight flows. Here's something most retail traders miss. Institutional money moves differently than retail money. And if you can track institutional flows, you can position yourself ahead of major moves. The crypto ETF space has seen $4.4 billion in inflows recently, with BlackRock's iBit leading the charge. But here's the sophisticated insight. The flow patterns show institutional money is buying dips and selling rips, creating a natural stabilization mechanism around current levels. The options market is telling us something crucial. There's significant open interest at the $120,000 call level for Bitcoin, suggesting institutional players are positioned for upside. Meanwhile, put-call ratios are at historically low levels, indicating complacency that could fuel a surprise move higher. Whale wallet analysis shows large holders have been accumulating on weakness. Over the past week, wallets holding more than 1,000 Bitcoin have added 15,000 coins to their holdings. This is classic institutional accumulation behavior. The key insight for retail traders: when institutions are accumulating, volatility tends to decrease until a catalyst triggers the next major move. We're in that accumulation phase right now, which makes our breakout strategies particularly compelling. Let me wrap this up with the key takeaways that will make you money over the next 24 hours. First, we're at a critical juncture where multiple catalysts are converging. The Fed decision, tariff deadline, and technical breakout levels are all aligning to create significant trading opportunities. Second, institutional adoption continues to accelerate despite short-term volatility. The SEC's approval of in-kind redemptions is a game changer that will drive more institutional money into crypto over the coming months. Third, the technical patterns are screaming for a resolution. Bitcoin's pennant formation, Ethereum's momentum continuation, and oversold altcoins are all setting up for significant moves. Remember your key levels: Bitcoin $120,000 breakout, Ethereum $3,800 momentum play, and Solana $175 bounce. Manage your risk, follow the institutional flows, and stay disciplined with your entries and exits. If this analysis helped you understand the markets better, smash that like button, subscribe to Boni's Life, and hit the notification bell so you never miss our market insights. Drop a comment below with your trading plans for the next 24 hours. I read every single one and often respond with additional insights. Tomorrow, we'll be back with a full breakdown of how these trades played out and what the Fed decision means for crypto's long-term trajectory. Until then, trade smart, manage your risk, and remember, in crypto, fortune favors the prepared mind. This is Boni from Boni's Life, and I'll see you in the next one.